It's great to be joined again for the last time in 2022 by Andrew Whitelaw from episode3.net. Andrew, Merry Christmas to you and everyone at episode 3, and thanks for joining us again.
Yeah, thanks for coming. It's hard to believe that we're already at the end of 2022, isn't it?
Yeah, it's been quite a roller coaster. Yourselves, episode3.net, you've moved across from being Thomas Elder Markets. You've had a big year.
It's been a big year for everyone, hasn't it, really? And let's be honest, it seemed a long time ago since, 2019 before COVID, and the world has changed a lot, even in the last 12 months.
Yeah, absolutely. Certain event happened in Ukraine in February that certainly shook up the grain markets. But right now, our farmers, especially in South Australia, are piling in the grain into the ports. So, what impacts is that having on the markets?
Yeah, so this is one of the issues we have when we've got a very big crop. What we're seeing at the moment is we're producing a big crop, despite all the floods and all the weather impacts we've had. It's going to be a big crop. But one of the issues we have is that farmers haven't sold that much grain. And I'm talking on a national basis. So farmers have held off selling. And now as that grain comes to market, you've basically just got this, I'm going to call it a tsunami of grain that's going to be, trying to get placed into traders. And what happens with any market, when there's a lot of offers of something, then the price invariably comes under pressure. And that's what we're starting to see is locally prices come under pressure. And, it's a frustration, but that's what happens. And with growers selling so much all at the same time, it's just going to put pressure on it because the buyer, let's be honest, the buyer's got his job to do. If he knows that, okay, I can offer you X price to you, but I might be able to offer a bit less to someone else, you'll probably get it. And so that just pushes the market down that little bit. And so that's what we're seeing at the moment, it's just that harvest pressure on pricing.
Now, I don't know if this picture works, but it does seem on a price level we are nonetheless coming off of can I call it a high base? We're better placed than we were if we are about to see a supply-driven drop in price.
Absolutely. Look, at the end of the day, the prices are still historically high. These type of prices that we're seeing at the moment around Australia are traditionally prices that we would typically only see when we've got a drought and we have a lack of supply. So the prices are historically good. I think it's important, though, to take into account that, well, whilst prices are good, the cost of producing that crop is higher. Labour costs, as we've spoken about before, chemicals, fertilizer, diesel, interest rates going up, everything's machinery, parts, everything's expensive. So it has cost a lot more. So it does potentially, every dollar fall in price does potentially cause that, cost price squeeze on the grower. So look, it could be worse, is all I would say. If we didn't have a conflict in Ukraine pumping up prices and a couple of weather risks around the world, then yes, we would be potentially definitely far worse off than we are just now.
All right, let's step behind the curtain and look at 2023. What are your predictions about what's going to happen where it does appear the big R word, certainly internationally, is being talked about, that we could have a recession? Or what's the impact going to be?
Yeah, well, I think that's well, look, first of all, predicting in this type of environment we've had for the last 3 years, predicting anything is difficult, more than an hour in advance, I reckon, these days. But when we look, there is a couple of indicators there. I think we are facing a fairly risky period. I think we're going to see a bit of reduction in global growth. We've just seen this inflation over the last, let's call it 2 years, really. And so what we're looking at now is, well, China is having some really bad issues when it comes to their domestic real estate. We've got reduction in demand around the world. Things are getting too expensive, so people are pulling back. And so there is this sort of concern that we'll go into recession. Look, and people talk about how agriculture is kind of blocked away from recession, and I'm not entirely sure that is the case anymore. If we look at wheat as an example, wheat follows corn. And corn is really driven by the U.S. ethanol industry. So if you look at things like crude oil and diesel, they have a direct correlation with wheat prices. So if we see people going out traveling less, using less fuel, using less energy, that can actually flow through to things like wheat and canola. And the other thing as well is if people are spending less, people have got less income, they're going to eat less meat. And they are going to end up, feedlots won't need as much grain around the world. I'm talking the major ones like the Chinese feedlots, the other parts of South Asian feedlots. They'll use less grain, which then just puts more supply back onto the market. So I think we are potentially coming up for a risky global environment. As people in agriculture, what we want is a good, strong economy, because a good, strong economy makes sure there's plenty of people to buy our products. But on the flip side, we've still got major issues in Ukraine. That war, that conflict is not ending anytime soon by the looks of it. And so that is going to keep putting some pressure on global supply. And I think, once we get out of this winter period, it'll be interesting to see whether the conflict ramps up and whether that has an impact on supply. But I think we are, I think the next 12 months will be as exciting as this 12 months.
Oh, that's good to hear. And we'll watch that tsunami of grain hitting the trade in the market next year with you, Andrew Whitelaw from episode3.net. Thanks for joining us and have a Merry Christmas.
No worries. Anytime, Ricky.